Welcome back to BitcoinDorks. Today, we're diving into the world of Chainlink, LINK, as it faces another price drop. Let's unpack what's been happening with this popular cryptocurrency. So, what's causing Chainlink's price to drop? In recent days, the crypto market as a whole has experienced increased volatility, with prices fluctuating wildly across the board. This volatility has been driven by a variety of factors, including macroeconomic trends, regulatory developments, and investor sentiment. Chainlink's price drop may also be attributed to some factors specific to the project itself. Chainlink is a decentralized Oracle network that aims to connect smart contracts with real-world data. It has gained significant traction in the crypto space, with its technology being utilized by numerous projects and platforms across various industries. However, despite its promising fundamentals, Chainlink's price has been on a downward trend in recent weeks. One possible explanation for Chainlink's price drop is profit-taking by investors. Chainlink experienced a significant rally in the first quarter of the year, reaching an all-time high above $50 per token. However, since then, its price has steadily declined, prompting some investors to cash out their profits and lock in their gains. This selling pressure has put downward pressure on Chainlink's price, contributing to its recent decline. Another factor that could be influencing Chainlink's recent price drop is market sentiment. In the dynamic world of cryptocurrencies, investor sentiment often serves as a powerful driving force behind price movements. When sentiment is positive, investors tend to exhibit a bullish outlook, eagerly buying and holding assets with the expectation of future price appreciation. This influx of buying pressure typically drives prices higher, creating a positive feedback loop that reinforces bullish sentiment. Conversely, when sentiment turns negative, investors may become cautious or even fearful, leading to a sell-off of assets as they seek to minimize losses or protect their capital. This increase in selling pressure can result in significant price declines, as panicked investors rush to exit their positions in anticipation of further losses. In extreme cases, a sharp downturn in sentiment can trigger a cascade of selling, leading to a market-wide correction or crash. In the case of Chainlink, recent developments or news surrounding the project may have negatively impacted investor sentiment, contributing to its price drop. For example, suppose there were reports of security vulnerabilities in Chainlink's technology, concerns about regulatory scrutiny, or rumors of internal strife within the project team. In that case, investors may react by selling their Link tokens out of fear or uncertainty about the project's future prospects. The broader macroeconomic environment plays a crucial role in shaping investor sentiment in the cryptocurrency market. Economic indicators such as inflation rates, interest rates, and geopolitical tensions can all have a significant impact on investor confidence and risk appetite, leading to shifts in market sentiment and corresponding price movements across the crypto space. Inflation rates, for example, represent the rate at which the general price level of goods and services in an economy is rising over time. High inflation rates can erode the purchasing power of fiat currencies, leading investors to seek alternative stores of value to protect their wealth. This flight from traditional fiat currencies to alternative assets such as cryptocurrencies can drive up demand and prices for digital assets like Bitcoin and Ethereum. Similarly, changes in interest rates can influence investor behavior in the cryptocurrency market. Central banks often use interest rates as a tool to control inflation and stimulate economic growth. Lower interest rates can make borrowing cheaper, encouraging businesses and consumers to spend and invest, thereby boosting economic activity. Conversely, higher interest rates can dampen economic growth by making borrowing more expensive, leading investors to adopt a more cautious approach and seek safer investments with guaranteed returns. Geopolitical tensions and global events can also impact investor sentiment and risk appetite in the cryptocurrency market. Events such as trade wars, political instability, and military conflicts can create uncertainty and volatility in financial markets, prompting investors to seek safe haven assets to hedge against geopolitical risks. Historically, assets like gold and government bonds have served as traditional safe haven assets during times of crisis. However, cryptocurrencies, with their decentralized and borderless nature, have emerged as an alternative store of value for investors seeking to diversify their portfolios and protect against geopolitical uncertainties. For instance, if there were concerns about a global economic recession or financial instability, investors may become more risk-averse, leading to a flight to safety assets such as cash or gold and a corresponding sell-off in riskier assets like cryptocurrencies. Additionally, geopolitical tensions between major world powers or escalating conflicts in key regions could heighten market uncertainty and drive investors towards assets perceived as safer stores of value. Changes in regulatory frameworks and government policies can also impact investor sentiment in the cryptocurrency market. Regulatory crackdowns or enforcement actions against cryptocurrency exchanges or projects can create uncertainty and fear among investors, leading to selling pressure and price declines. Conversely, regulatory clarity and supportive government policies can boost investor confidence and foster positive sentiment towards cryptocurrencies, driving prices higher. The behavior of influential market participants, such as large institutional investors or cryptocurrency whales, can also influence market sentiment and price movements. These entities often have the ability to move markets with their large trading volumes and can exacerbate price volatility through their actions. For example, if a prominent investor or hedge fund were to announce a significant divestment from Chainlink or express negative sentiment towards the project, it could trigger a wave of selling among retail investors, leading to a decline in Chainlink's price. In conclusion, the broader macroeconomic environment, including factors such as inflation rates, interest rates, geopolitical tensions, and regulatory developments, can significantly influence investor sentiment and risk appetite in the cryptocurrency market. By understanding how these macroeconomic factors interact with market dynamics, investors can better navigate through periods of volatility and uncertainty, making informed decisions about their cryptocurrency investments. That's all for today's video.